Hello traders, welcome to Investoo.com's essential guide to supply and demand trading. In this lesson, we are going to finally learn how to use supply and demand zones to trail our stops. And what we're going to do is we're going to go back to the Aussie US dollar 4-hour chart and to this position that we took on it, all right? As you remember, we had the absorption candle at this area of demand, right? Then a retest of this area of demand at supply. Why? Because of the buyers that got that got absorbed here by sellers are going to turn into sellers right here and continue for a continuation of the move down. Okay, now this is where we left off, and this is where we are going to start with the trailing stop uh, part of this trade. Okay, so we have a short position with an open risk of 80 pips, 82 pips. All right, so let's write that down so we don't forget that we have 82 pips risked here on this trade. Okay, so we need at least an 82 pip profit to get a 1-to-1 risk to reward ratio, but this is not what we are aiming here to do. What we are aiming here to do is to use supply and demand zones to trail our stops. Now, because we are in a down move, we are going to use supply zones to trail our stops. Why? Because these are the zones that if we break above them, then we need to get out because the short idea or the short trade is no longer valid. So we are going to go ahead and thicken this chart up for you guys. And what we need to do here is, well, we need to wait for price to retrace, okay, and form an area of supply. Right here we have a candle that is body is 50% or less of the entire height of the candle. So this is the base candle, all right? And here we have the lines of the supply zone, okay? So we have the height of the candle and the complete zone right here, okay? So basically, when price comes all the way up here, retraces, creates this area of supply, and continues its down move, then we move our stops above this area of supply, okay? And now we have locked 165 pips. So we are going to see this right here, and we are going to write it on our charts so it's very visible to us. Now, what happens if price breaks through this area of supply? Well, our short idea is no longer valid and we need to get out as soon as possible. But we are still right in this short position. So we are going to pay attention for the next area of supply. And right here we have a nice retracement and a base, okay? We have a base right here. And this is our area of supply, guys, okay? And what happens next is that price comes all the way up to this area and retests this just to continue down. So what we are going to do when this area of supply is created, well, we are going to move our stops down just above this area of supply. Why? Because if price would have broken through the supply, absorbing those sales orders and breaking with the previous high, then our short idea would no longer be valid. All right, and now we have locked 275 pips using this technique. Okay, remember that we are not using targets, we are just using supply and demand zones as well as our trailing stops. And remember that this works better in a higher time frames because you are going to be gaining much more pips than on the lower time frames. And on the lower time frames, the supply and demand zones are not as strong as in the higher time frames. So basically what we're going to do here is we're going to wait again for price to create a new zone of supply. And right here we have that retracement and that continuation. So we chose to use this base to draw the next area of supply with that lowered line right here. And this is the area where if price breaks to the upside, well, we need to get out immediately. So what we're going to do, we're going to trail our stops. And by trailing our stops all the way down here, we have locked 417 pips. So let's write that down because that is an impressive achievement. 417 pips locked. And as you can see, price tests this area again, retraces, and then stops us out before completely breaking and absorbing this supply. Now the supply might be actually retested as demand, and we can look for maybe a long opportunity on the Aussie US dollar. But instead of just locking in 100 pips, we locked in 417 pips using supply zones to trail our stops.